Hello, my dear CA Foundation students. Okay, I hope your paper went well today. It was a very easy paper. Some of you have already told me that it was lengthy, but we keep telling accounts you have to be quick. Okay, expect a lengthy paper and go to the exams. So most of the reviews have been that exam was good, exam was easy. Okay, so let's try to analyze the paper. Let's try to go through the paper. Let's have a quick recap of the paper and see what has happened, and what institute has asked. And as we had already discussed earlier, institute is asking a lot of questions from module 2, okay, the second module, where we have your partnership chapter or your incomplete records or your company accounts for that matter. Okay, so what we will do is quickly we'll try to recap or go through the entire paper. Then we can see where you all have gone wrong. Now, question number 1. If you see question number 1, they said state with reasons. Obviously, true or false is the first question. Always true or false is the first question. Now, nominal accounts are balanced at the end of the accounting year. Okay, all nominal accounts obviously at the end of the year they get transferred, okay, to P&L. So obviously this is true. Overhaul expenses of second-hand machinery purchased are revenue expenditure. When you purchase a second-hand machinery, whatever expenses are there, they are actually considered as capital expenditure. So this is false. Valuation of inventory at cost or NRV is based on principle of conservatism. Conservatism tells you to be prepared for future losses. So obviously this is true. A promissory note can be made payable to the bearer. Okay, bill of exchange you can make it payable to bearer, but promissory note you cannot make it payable to bearer. So this is false. You need to have a specific person over there. So this is false. The receipt and payment account for a non-profit organization follows the accrual concept of accounting. Accrual concept of accounting is followed when you prepare income and expenditure account, but receipt and payment account, it is cash system. So it is false. It is a cash book, obviously. Legal heirs of a deceased partner are entitled to his capital account balance only. No, we give whatever is there in the current account, that is also given. Goodwill share and interest on capital, profit share, everything is given. So this is also false. Legal heirs of a deceased partner are entitled to his capital account balance is false. Okay, so easy 12 marks. I don't think there was anything that was tricky or anything like that over there. Next, differentiate between bookkeeping and accounting. Another 4-mark theoretical question from chapter 1. From chapter 1, easy 4 marks again. Then, pass necessary journal entries to rectify the following errors using a suspense account. They are telling using a suspense account. Using a suspense account means what? Which stage of rectification we are in? This is after preparation of trial balance. After preparation of trial balance, but we have not gone into the next accounting period yet. Okay, let's see the first one in this. Goods of the value of 500 returned by Mr. A were entered in the sales day book. Okay, they have entered in the sales day book and posted therefrom to the credit of his account. Goods are returned, so it should actually be sales return. So sales return account debited 500. Sales return account should be debited 500. And were entered in the sales book. So sales is wrongly recorded. So sales account also debited 500 and posted therefrom to the credit of his account. You should actually post to the credit only. They have done that correctly. Only thing is they have put it into the sales book instead of the sales return book. So this will be to suspense account 1000. This should be your easy rectification. Such rectifications are already there in our material which we have discussed in class. Okay, 250 entered in the sales return book has been posted to the debit of Mr. R who returned the goods. 250 entered in the sales return book has been posted to the debit of R. Actually, it should be to the credit of R. You have entered in the sales return book. So what you will do, instead of a credit, you have debited R. So what will you do? You will credit R 250 plus 250, 500 rupees. And suspense account will be debited for 500 rupees. Clear? Next, a sale of 700 made to Mr. Q was correctly entered in the sales day book. Okay, you made a sale of 700 entered in the sales day book also, but wrongly posted to the debit of Mr. S. Wrongly posted to the debit of Mr. S. You should have debited whom? Mr. Q. But you have debited whom? Mr. S. Some other person only you have debited. So what happens over here? Q's account debited 700. Okay. S you have wrongly posted. So what we should do? We remove that to S 70 and remaining everything will go to suspense account 630. Clear? Next, total of the discount allowed column in the cash book for September amounting to 350 was not posted. Total of the discount allowed. When total is not posted, only one side. The line items are correctly posted. Total is not posted, discount allowed. So we will pass the entry discount allowed debited 350 to suspense account 350. Okay. If you notice, all these questions we had discussed in our marathon video. Okay. Simple general questions. So 4 marks rectification easily into the pocket. Okay. Next we move into question number 2. 2A. They've asked BRS question for 10 marks. 10 marks from BRS. Cash book of Hari showed a debit balance of 1,36,800. Okay, debit balance means it is not your OD and all, it's your normal balance. Normal balance of 1,36,800 as on 31st December 2023, which was in disagreement with the balance as per passbook. Following discrepancies were noticed. What are you starting with? Your starting point is your cash book. Cash book normal balance is your cash starting point. Dividend of 18,000 was deposited in the bank, which Hari had no information. It is deposited in the bank. You have not passed the entry. So this will be plus. Clear? Check was issued to Suresh 14,780, of which on 18/12/2023, which was recorded in the cash book as 14,870. What is the check that you have issued? 14,780. So what will be the difference? 14,780 minus 14,870. 90 rupees. What you have done? You have entered extra in the cash book. Extra in the cash book. So you will add this also back. You have reduced the cash book balance. You will add 90 rupees. Only 90 rupees you will add. Here you will add 18,000. 18,000 will be added back. Okay. Next, check totaling of 55,000 was deposited in the bank, which were not cleared. Check was deposited. What will you do? Cash book you have already added. So subtract minus 55,000. Minus 55,000. Next, Mediclaim premium of 14,160 was paid as per the standing instruction of Hari, which was not recorded in the cash book. Passbook you have already entered it. So cash book it's not entered. Minus 14,160. Goods amounting to 1,60,000 were sold to Ajay in November. He deposited a check on 15 December 2023 after deducting 4% cash discount. They deducted 4% cash discount. This entry was missed while preparing cash book. This entry was missed. He deposited the check. What did we miss? Not 160. 1,60,000 minus 4%. 1,53,600. This is the amount. What happened to this amount? He has already deposited the check by deducting the discount. We have not recorded this. So 1,53,000 we have 600 we have received in the bank, but here we have not received. We have not entered. So we are going to add this in the cash book. Bank charges for issue of one checkbook 150 was skipped while preparing cash book. Passbook already entry is made. So you will subtract this 150. Hari received a UPI of 1,000 for sale of scrap, which was not entered in the cash book. Passbook we have already received 1,000 rupees. So here we are going to add this 1,000. Add this 1,000. Checks amounting to 1,80,000 were issued during the month, but checks of 1,44,000 were only presented. Checks were issued. How much? 1,80,000 minus 1,44,000 were presented. So 36,000 is not presented. So what will you do with 36,000? Checks are issued. You have already subtracted. So you're going to add it back. Prepare bank reconciliation statement. That should be it. And ascertain the balance. Simple question from BRS for 10 marks. These kind of questions are there in your study material as well. Simple one. Okay, next question is from your bills of exchange. Bills of exchange also they have asked 10 marks. 10 marks from bills of exchange. Harry draws a bill on Sejal for 60,000 on 1/1/2023. Harry draws a bill. So what will be the entry here? bills receivable account. Whose books they have asked? In the books of Sagel. Okay, in the books of Sagel they have asked. So what you're going to do? Always think from the angle of Sagel. So you're going to write Harry account debited. Harry account debited 60,000 to bills payable 60,000. Harry account debited to bills payable 60,000. Okay, because Harry draws a bill on Sagel for 3 months. Sagel accepts the bill and sends it back to Harry to get it discounted for 56,000. Who got it discounted? Harry got it discounted. So for this, you are not going to pass any entry because you are Sagel. Harry remits 1/4 of the amount to Sagel. Harry has sent 1/4 of the amount. So what will be the entry now? You got 1/4. How much is the amount? 56,000. 56,000 into 1/4. So you are getting 14,000. So you will receive 14,000. Bank account debited 14,000. But if you notice, discounting charges are also there. Discounting charges are 4,000. 60,000 minus 56,000. 4,000 is the discounting charges. So discounting charges also will be debited. That is 4,000 into 1/4. Basically 1,000. To what? Who gave you this money? This money was given to you by Harry. So Harry, 15,000. 1/4 of the amount he has given, you have taken it, and 1/4 of the discounting charges also you have put into your pocket. Okay, you are going to bear that. On the due date, Harry was unable to remit his share to Sagel. Okay, on the due date, I was supposed to make the payment, but I'm not making the payment. Rather accepts a bill for 80,000 for a period of 3 months. Okay, I am supposed to get money, from Harry. Harry did not give me the money. So what did I do? Now I drew a bill on Harry and he accepted the bill. So what will be the situation for me now? Bills receivable debited. Okay, to Harry, 80,000. Bills receivable debited to Harry, 80,000. But remember, the old bill is there. The old bill. Do you remember the old bill? What happens to the old bill? It is discounted by Harry and it is with the bank. Bank will ask me money and I'm going to make the payment. So the entry for the old bill will be bills payable debited 60,000 to bank. 60,000. This is the situation for the old bill. Okay, next what is going to happen? This bill was discounted by Sagel for 74,600. Who has discounted this bill? Sagel has discounted this bill. So here what will happen? Sagel is getting money. Bank account debited 74,600 and discounting charges debited. It's going to be 5,400 to bills receivable 80,000. Bills receivable is gone and I have discounted and I have received the money. Now, this bill was discounted by Sagel for 74,600. Okay. Sagel, after making payment of the first bill, sent 3/4 of the amount remaining to Harry. 3/4 of the amount remaining to Harry. This is one bouncer here. You have to be careful. What did they tell? Sent 3/4 of the amount remaining. First, you have to know how much is the amount remaining. How much is the amount remaining? Okay, now see over here. Harry had to pay how much? Harry had to pay us 45,000. Why 45,000? Out of the 60,000 bill, 14,000 Harry has given us. Okay, and 1,000 is my share of discounting charges. So Harry has to pay us 45,000. Okay, how much did we get now? When we discounted, we got 74,600. So 74,600 minus 45,000. You have 29,600 with you. You have 29,600, which is the balance. Correct? This balance, what you're doing, you are going to give it. Okay, you are going to give it. But how much are you going to give? See over here. How much are you going to give? Okay, 3/4. 3/4 of the amount remaining to Harry. After making the payment of the first bill, 15,000 was with me. 45,000 Harry was supposed to give. He didn't give that. And whatever I got, 74,600. Out of that, 45,000 I'm going to adjust. 29,600 is there. 3/4 I'm going to give it to Harry. 3/4 I'm going to send it to Harry. So 29,600 into 3/4 is basically 22,200. Is 22,200. So what is going to happen now? Harry account debited. Harry account debited. Not only 22,200, I will also collect the discounting charges. 3/4 of the discounting charges also should be taken from Harry only, because only 1/4 I had kept originally. If you see over here, discounting charges are 5,400. So 5,400 into 3 by 4. 5,400 into 3 by 4, 4050. So plus 4050. So 22,200 plus 4050, 26,250. You will debit Harry. 2. And what is the amount you are going to send Harry? Only 22,200. Then 2. What is the discounting charges that is gone from your pocket? That is 4050. So what's happening? Harry did not give the money. I made the payment to bank. And what did I do? I drew a bill on Harry. Harry accepted it. I discounted it. I got money. After discounting, whatever money Harry was supposed to pay, I adjusted that. Remaining money, 3/4 I send it to Harry. Okay, made the payment. After making payment of first bill, sent 3/4 to Harry. On maturity of the bill, Harry became bankrupt. Maturity of the bill, Harry became bankrupt. Which bill? This bill. The bill which we have drawn on Harry for 80,000. On that day, Harry became bankrupt. Now, where is that bill? With the bank. What will bank do? Bank will take that money from us. Bank will take that money from us. So the entry will be, Harry has to pay me 80,000. So Harry account debited 80,000 to bank account 80,000. First bill, I was the drawee, so I ended up paying. Harry didn't give me money. Second bill, I was the drawer. Harry was supposed to pay, but Harry didn't pay. Now what happened? Bill got dishonored. Bank took the money from me. 80,000 gone. On maturity of the bill, Harry became bankrupt and his estate paying only 40 paise in a rupee. So what you're going to check? Check what is the, anyways they have asked you to prepare ledger. Prepare the ledger of Harry. You're going to prepare Harry's account. And whatever journal entries we have discussed over here, all that is going to be posted to Harry's account. And finally, whatever we get, okay, out of that, Harry will pay only 40 paise in a rupee. So you'll pass this entry finally. That is going to be basically bank account debited. This will be for the 60% whatever you're getting in the ledger. And bad debts account debited 40% to Harry 100%. This 100% you'll get in Harry's account as the balancing figure. You need to find Harry's account. How are you going to find? All the journal entries that we have just discussed, everything has to be posted into Harry's account. That time you'll get to know what is the situation in Harry's account. Clear? Yes. Okay. Next question. So we have seen till now only that one point of bills of exchange where you're supposed to calculate the 3/4 of the amount remaining. That was a little tricky. Other than that, everything is straightforward. Whatever we have seen in our classwork material and whatever we have discussed earlier in our marathon videos. Okay, next, third question. They have asked final accounts. Okay, the following trial balance is the trial balance of proprietor as on 31st March. Prepare trading account and P&L account for the year ending 31st March 2024 and balance sheet as at that day. See, we'll see what they have asked. Let's go into the adjustments first. Closing stock on 31st March. What will happen to closing stock? This will go to trading account. Trading account, you're going to credit it. And in balance sheet, you're going to show it as asset. Balance sheet, you're going to show it as asset, regular adjustment. During the year, plant and machinery was purchased for 3 lakhs, but it was debited to purchases. It was debited to purchases. So what you will do, go and find where is your purchases. From this purchases, you're going to 21,35,000 minus 3 lakh. You're going to remove 3 lakhs. Because this is plant and machinery. So you have 18,35,000 of purchases remaining. Then what you're going to do? Find your plant and machinery. Where is your plant and machinery? Over here. So this is going to be 5 lakh plus 3 lakh. Now you have total plant and machinery of 8 lakhs. This is your rectification which they have put into your final accounts as well. 3 months factory rent is due but not paid. 3,000. 3,000 is not paid. So what will you do? Factory rent. Okay, you will add it to rent. Add it to rent when you're preparing your P&L, and then you will show it as outstanding rent in the balance sheet. Provide depreciation at the rate of 5% per annum on furniture and 10% per annum on machinery and motor van. No problem. Now the thing is, when you're calculating for furniture, what did they tell? 5% per annum on furniture. So you have your furniture balance over here, 26,000. Calculate 5% of that. That is going to be 1,300. So depreciation will be in your P&L, as well as it has to go into your balance sheet. Reduce it from the furniture, minus from furniture. No problem. Next adjustment we will see. 10% on plant and machinery and motor van. Now, plant and machinery, you have to remember, 10% will not be on 5 lakhs, 10% will be on 8 lakhs. So 80,000 will be your depreciation. Depreciation will be 80,000 for plant and machinery. Then motor van, 1,20,000. So what will happen? On this, 12,000 will be your depreciation. On this, 12,000 will be your depreciation. So you know the effects of depreciation. What will be the effect? You will show it in P&L debit, and also you have to reduce it from the respective asset. Only thing we have to be careful over here is plant and machinery. You have to be careful. Plant and machinery, 8 lakh, not 5 lakhs. Okay, because rectification has taken place. Further bad debt, 7,000. Why did they tell further bad debt? That means already bad debt is there in the question. Can you see bad debt over here? 25,000. So now in P&L, bad debt will be 25,000 plus 7,000. This is going to be 32,000. 32,000. But debtors, what you are going to do? Debtors, 4,57,000. So your debtors will be 4,57,000 minus 7,000. Now your debtors will be 4,50,000. 4,50,000 is going to be your debtors. Okay. Provision for bad doubtful debts to be increased to 30,000 at the year end. Increased to 30,000. Right now you have provision. It is 25,000. You have to increase it to 30,000. So now what will happen in the balance sheet? Here balance sheet debtor 30,000 will be your PBD. 30,000. And your debtor will be shown at 4,20,000 in the balance sheet. Debtors will be 4,20,000 in the balance sheet. And one more thing what you have to remember, provision is 30,000. No, this is going to increase to 30,000. So therefore, 5,000 will be debited to P&L. 5,000 will be debited to P&L. That is one thing that you have to understand. Increase in the provision. Okay. Then they have told provision for discount on debtors to be made at 2%. Provision for discount on debtors to be made at 2%. So now what will you do? 4,20,000 you have minus provision for discount. 4,20,000 into 2%. That is going to be 8,400. You remove that. Now 4,20,000 minus 8,400. You remove, it will become 4,11,600. 4,11,600 will be your debtor in the balance sheet. And this provision for discount which you have reduced, this will be debited to P&L as well. You have to debit it to P&L as well. Clear? This is going to be your situation. This is the situation for question number, point number 7. So all the adjustments we have discussed. So remember the order. Bad debts you have to remove. Then you have to subtract the provision for bad debt. Then the provision for discount will be computed. Now look at it. Plant and machinery, balance sheet asset. Office furniture, balance sheet asset, depreciation has to be removed. Opening stock, trading account, you will debit it. Motor van, again balance sheet asset, depreciation has to be removed. Sundry debtors we have already computed, it will be shown like this. Cash at bank, asset in the balance sheet. Cash in hand, cash at bank, both will be asset in the balance sheet. Wages, what are you going to do with wages? Wages will go into trading account, debit. Salaries will go into P&L account, debit. Purchases will go into trading account only. But what we have to always check when there is purchases, see over here, returns outwards. Returns outwards. So what will you do? Subtract this 55,000. So 18,35,000 minus 55,000. Your purchases will be 17,80,000 in the P&L. 17,80,000 in the trading account. Clear? Bills receivable. What will you do? Just show it in the balance sheet asset. Returns inward, sales return. So what happens when you have your sales over here, 48 lakhs, you have to subtract returns inwards. So this is going to be 48 lakhs minus 93,000. This will be 47 lakh 7,000. This will be your sales and this will be credited to trading account. Credited to trading account. Clear? Next, after that, what do you have? Bills receivable done. Drawings, you will subtract it from capital, minus it from capital. Advertisement expense, P&L debit. Factory rent, P&L debit. Rent, what we have to remember? There was this outstanding rent of 3 months. So what you will do? 8,000 plus 3,000. Your rent will be shown as 11,000. P&L debit. Insurance, P&L debit. General expenses, P&L debit. Bad debt, we have already discussed this. What will you do? 25,000 will be debited plus 7,000 also will be debited. P&L debit. Discount allowed also will be debited to P&L. Clear? Simple items in the trial balance. Next, you go into capital. What are you going to do? Capital will be basically this 4 lakhs minus the drawings. Okay, plus or minus whatever profit you get. That will be your capital. Sundry creditors. Liability side of balance sheet. Sales we have discussed. Bills payable, liability side of balance sheet. Provision for doubtful debts will also be there, which we have internally discussed in detail. 25,000 is there, 30,000 we have increased, so 5,000 will be debited to P&L as well. Okay, returns outwards already done. Discount received will be credited to P&L. This should be a simple final accounts question. There shouldn't be any problem with this one. Okay, easy 10 marks into the pocket. Next, let's go further. Okay, next question, what they have asked, it's partnership. You can't avoid partnership. Okay, you can't skip partnership. I have been telling you repeatedly not to skip partnership at any cost. See, easy question they have asked. Following is the balance sheet of Krish and Bala sharing profits and losses in the ratio of 3:2. This is your profit sharing ratio. Okay, 10 mark question. Now you have Krish and Bala over here. Okay, let's go and see what the adjustments are. On admission of Soba, new partner is admitted. Soba is admitted for 1/6 share in the profits. Okay, it was decided that. Now, anywhere in the question, have they given you the new profit sharing ratio? No. So, what we will do? 1/6 is given to Soba. So, 5/6 will be shared between Bala, who are the people, by Krish and Bala. It will be shared between Krish and Bala. Whatever 5/6 is there, it will be shared between Krish and Bala in their old ratio. Their old ratio was 3:2. It will be shared in the ratio of 3:2. Therefore, in this question, the sacrificing ratio will also be 3:2. Sacrificing ratio will also be 3:2. What they have told, value of land and building to be increased by 5,000. Increased by 5,000, so revaluation account will be credited. Value of stock to be increased by 3,500. Revaluation account will be credited again. Provision for doubtful debts to be increased by 1,500. Again, it will be revaluation account debited. Provision will be a liability, so revaluation account will be debited. Liabilities for workmen compensation reserve was determined to be 8,000. They said workmen compensation reserve is only 8,000. So what you're going to do? Workmen compensation reserve is actually 10,000. It's actually 10,000. So what you will do? 10,000 minus 8,000. You have 2,000 with you. Distribute to partners. Distribute it to partners in the ratio of 3:2. Distributed partners in the ratio of 3:2. Okay, old partners. Soba was to bring cash of 25,000 as our capital. So what will you do? Okay, 25,000 capital. So bank or cash account debited to capital account, Soba's capital account, and she is going to bring 12,000 as goodwill also. So 12,000. So totally 37,000 will be first credited to Soba. Then what you are going to do? 12,000 goodwill. This goodwill, whatever she brought, it is going to be distributed. Distributed to whom? It will be distributed to Krish and Bala in the sacrificing ratio, which is basically 3:2. It will be distributed to Krish and Bala in the ratio of 3:2. Simple admission question, easy. You should just take this 10 marks and put it into your pocket. Okay, simple question. Prepare revaluation account, capital account, and balance sheet of the new firm. Okay, yes. So till now, the only twisted thing which we saw was that bills of exchange, that one small part. Otherwise, everything is straightforward from the material. Okay, 10 marks, admission question, balance sheet you have to prepare. When you're preparing balance sheet, what you're going to do? Land and building, whichever has changed, you're going to modify the values and you'll get the new balance sheet value. Clear? Yes. Next, we have fourth question. 4A. XYZ were a firm sharing profits and losses in the ratio of 3:2:1. Again, there is partnership. Their balance sheet as on 31st March 2024 was as follows. Can you see what they have done? They have split partnership into two different questions. You cannot skip. At least one of them you will be forced to attempt. Okay, now we'll see at the end of the question what they have asked. Z retired on the above date on the following terms. Z has retired. Okay. Now, goodwill of the firm was valued at 60,000. They have valued the goodwill as 60,000. So what will happen? This is the goodwill of the firm. You have to see what is Z share. Now, compute Z share. You can see the starting of the question. Okay, you can have a look at the starting of the question where they have told it is 3:2:1. So Z share is 1/6. So into 1/6, Z share of goodwill will be 10,000. Z's share will be 10,000. Z is the person who is retiring. Value of patents to be reduced by 20%. So 20% you're going to reduce. So basically what you're going to do, revaluation account will be debited. Revaluation account debited for 30,000 into 20%, 6,000 is the value of patent. Next, and that of machinery to 90%. Machinery you're going to bring it to 90%. Here also revaluation account will be debited. But what is the machinery value right now? 60,000. They want to make it 90%. That means they want to remove 10%. 6,000. 6,000 is going to be removed. Provision for doubtful debt was to be raised to 10%. They want to raise the provision to 10%. Right now, what is the provision? It is, right now, what is the debtors? Debtors is 50,000. On this, if you calculate 10%, it is going to be 5,000. But right now, how much do we have? We have only 4,000. So what we will do, we'll create provision. So revaluation account debited for 1,000 and you're going to create 5,000, 1,000 provision, which will increase it to 10%. Liability on account of provident fund was only 6,000. Provident fund liability, they're telling it is only 6,000. So 12,000 is there. We don't need 6,000 in that. So what you will do, revaluation account will be credited for 6,000. 6,000 you will credit it to revaluation account. Liability for workmen compensation to the extent of 6,000 is to be created. How much liability we have right now? Workmen compensation. They said we have to create. Understand this. Liability for workmen compensation to the extent of 6,000 is to be created. Right now, what we are going to do? So we are going to debit the partner's capital in the ratio, or we can directly put it into revaluation account debit. Revaluation account debited, you are going to create 6,000 more. Is to be created. To the extent of 6,000 is to be created. Z took over the investment at market value. What is the market value of the investment? You can see 25,000 is the investment. Market value is 27,600. So 2,600 will be first debited to revaluation account. Revaluation account you have to debit. Revaluation account debited for 2,000. Sorry, revaluation account will be credited for 2,600. You are going to increase the value. So this will be credited for 2,600. After that, what you are going to do? Partner's capital account. Which partner? Z's capital account will be debited for 27,600 to investments. 27,600. So this 27,600 will not be there in the balance sheet. Investment will not be there in the balance sheet. Amount due to Z is to be settled on the following basis. 50% on retirement. When you prepare partner's capital account, anyways, they have asked you to prepare partner's capital account. Whatever you get in partner's capital account, 50% is going to be paid on retirement. 50% of the balance within 1 year and the balance by a bill of exchange without interest at 3 months. What are they telling? 50% on retirement, 50% of the balance within 1 year and the balance by a bill of exchange. So what is going to happen? Imagine we get some amount. Imagine 100% is supposed to be paid. Out of this, 50% will be paid. Okay, out of the remaining, okay, balance, 50% of the balance within 1 year. So 50%, so that means 25% of whatever you're going to get, you're going to take it as Z's loan. Z's loan. And they said what? And the balance by a bill of exchange. Remaining will be taken as a bill of exchange. Okay, bill of exchange which they are going to settle within 3 months. So what is the situation now? What do we have in this case? We got 50% money. 25% we are not getting. We'll get it in future only. And the remaining 25% you're going to take it as bills receivable in the balance sheet. Did you understand this? Okay, when you enter all the things into the partner's capital account, when you enter all the things into partner's capital account, Z's account you're going to close. When you're going to close Z's account, just remember one thing. We have to pay some amount to Z. Okay, some amount. Now, bills receivable for whom? For Z. But for us, it is going to be bills payable. Are you getting my point? Don't make this mistake. Bills receivable for whom? For Z. For us, it is going to be bills payable. So basically, in this case, understand whatever balancing figure you get in Z's account, the balancing figure you will do like this. Z's capital account debited, whatever amount. Imagine 100%. To bank account 50%. 50% is going to be paid. To Z's loan 25%. And then to bills payable 25%. This is the situation. Okay, this is something little tricky, but it is manageable. What did they tell? 50% on retirement and 50% will be paid of the balance will be paid within 1 year, and remaining will be bill of exchange without interest at 3 months. So what you're supposed to do, show entries for the treatment of goodwill. For treatment of goodwill, what you're going to do, 10,000 is the goodwill. What is the sacrificing ratio? Z is gone, 3:2. 3:2. So what will you do? 3 by 5 into 10,000. So 6,000 and 2,000. You'll pass the entry. X account debited 6,000. Y account debited 4,000. To Z's account 10,000. This will be the journal entry for goodwill. And prepare revaluation account. We have already discussed the revaluation. Partners capital account. What you have to remember? Ending, whatever you get, 100% what is there in Z's account, 50% will be paid. So that will be reduced from the bank balance. 25% will be treated as Z's loan. That will be there in the balance sheet. And remaining 25% will be shown as bills payable in the balance sheet. Clear? And this is your balance sheet which you have to prepare. So what will happen over here? Understand this. There is one goodwill in the balance sheet already. One goodwill is there in the balance sheet already. What are you going to do? Write off this goodwill. Write off the goodwill. That means partners capital account will be debited for this goodwill. Patent, machinery, investment. Investment is gone. Okay. Other things, whatever revaluation we have discussed, this is increased to 5,000. This has gone up to 5,000. Okay. Rest of the things as it is in the balance sheet. Partners capital will obviously change. Z will not be there. Z's loan and bills payable will be there. This is your analysis of this particular question. Another easy, manageable 10 marks in the exam. Okay, after 20 marks of partnership, next they have asked 10 marks from NPO. NPO 10 mark question. From the following receipt and payment account of Delhi Club, prepare income and expenditure account and balance sheet. They have given the receipt and payment account. They are asking you to prepare income and expenditure account and balance sheet. Okay, so here what we are going to do, understand this. By default, you will have to prepare opening balance sheet also. Opening balance sheet you need. Why do you need this? To find the capital fund. Capital fund will be the balancing figure. You need opening balance sheet, you'll get the capital fund. Okay. Now, have a look at this. Cash in hand opening. Cash in hand opening and cash at bank opening both will go into the opening balance sheet. Both will go into the opening balance sheet. And then cash in hand closing and cash at bank closing. Both will go to the closing balance sheet. Both will go to the closing balance sheet. Now, understand this. Subscription in arrears for 2023. We are in which year? We are in 2023 only. Okay, for 2023 is 1,200 and received in advance is 550. So what will you do? Whatever is in arrears, this you will add it, and this 550 you will minus it. And this will go to balance sheet as an asset, and this will go to balance sheet as a liability. Clear? Subscription you will add it and then subtract this one, and then you will take it into the balance sheet. Insurance premium outstanding 80. So what will you do? You will add it to the insurance premium, and in balance sheet you will show it as liability. Miscellaneous expense prepaid is 90. So what will you do? You will subtract 90, and in balance sheet you will show it as asset, prepaid expense. Clear? Yes. 50% of the donation is to be capitalized. 50% of the donation will be capitalized. So what we have to find the donations. Donation is 7,000. So what you will do? 7,000 is your donation. 50% is capitalized. So it will go into balance sheet and you can show it on the liability side, or you can add it to capital fund. You'll add it to capital fund. Remaining 50%, what will happen? It will be taken as income. It will be taken as income in the income and expenditure account. Entrance fees are to be treated as revenue income. So no problem. Entrance fees you don't need to capitalize. You have entrance fees over here. What will you do? Directly you will take it as income. Clear? Subscriptions, it will be taken as income, and you know the adjustments what we have to add and minus. 8% interest has accrued on investment for 5 months. Okay, 8% interest has accrued on investment for 5 months. So what we are going to do? Find whether interest on investment is there. Yes, interest on investment is there, 100 rupees. Have they given you anywhere that investment is purchased during the year? Yes, purchase of investment. Now, what is the investment value? 6,000. 6,000 into 8% into 5 divided by 12. So 6,000 into 8% into 5 divided by 12. 200 is your interest. Out of that, you can see over here, interest that is received is 100. So minus 100. So 100 is still receivable. 100 is still receivable. So what you will do? In your income and expenditure account, you will take 200. You will add and take it 200. And remaining 100, where will it go? It will go into the balance sheet as asset. Is this clear? They have given 8% for 5 months, it is accrued. So 5 months you will calculate. When you calculate, you are getting 200. Out of that, you can see in the receipt and payment account, 100 is already received. So remaining 100 will be shown as receivable in the balance sheet. And here you will show income as 200 because it is accrual concept. Okay. Next, after that, what did they tell you? Billiards table costing 30,000 were purchased during the last year and 20,000 were paid for it. Billiards table costing 30,000 were purchased during the last year. So what will happen? This 30,000 will go to balance sheet. Which balance sheet? Opening balance sheet as well as closing balance sheet. They have not given us anything about depreciation. So it will go into closing balance sheet also. And were purchased during the last year and 20,000 were paid for it. That means 30 minus 20, 10,000 is not paid. So 10,000 will be shown as creditor for billiards. Creditor for billiards table 10,000. Where it will be shown? In the opening balance sheet. So when you're preparing your opening balance sheet, 10,000 will be shown as creditors for billiards table. What did they tell over here? Billiards table costing 30,000 was purchased. Out of that, which was when was it purchased? Last year. So that table has to be there in opening balance sheet also, and it will be there in closing balance sheet also. And what did they tell? Only 20,000 was paid. That means 10,000 was not paid. It's a liability now. It will be there in the liability side of the balance sheet when you prepare your opening balance sheet. Now let's see what other items we have. Interest received from bank. It will be taken as income directly. No issue. Sale of old newspaper, income. Sale of drama ticket. Now what you will do? Drama ticket is over here. Drama expense is over here. You will set it off and you will take 750 in the income and expenditure account on income side. Okay. Now salary. You will take it as expense. Repair is expense. Purchase of furniture. Purchase of furniture. What will you do? It will go into balance sheet as asset. It will be taken as asset in the balance sheet. Miscellaneous expense. It will be taken as expense. Remember you had prepaid. Okay. Then we have purchase of investment. Investment will also go into balance sheet asset side. It will go into balance sheet. Insurance premium. Insurance premium, what we are going to do? It will be taken as expense. But remember, we have an outstanding over here. Don't forget that. Billiards table 10,000. What is this? Last year spending 10,000 is paid. Last year spending 10,000 is paid. So now what happens? In the opening balance sheet, you will have payable 10,000 for billiards table. But closing balance sheet, this payable will not be there. This payable will be nil. Last year 10,000 was spending, so it will be there in the opening balance sheet. But closing balance sheet, when we prepare, there is nothing because 10,000 is paid over here. You can see in the payment side, billiards table 10,000. Okay, paper, ink, this will be an expense. Then rest of the things we have already discussed. Drama expense will be adjusted. So when you prepare your opening balance sheet, basically you will have in your opening balance sheet cash in hand, cash at bank. Then what will you have in your opening balance sheet? Investment is also purchased this year only. Furniture is also purchased this year. We have no idea about the furniture last year. Maybe we were sitting on the floor that time. Okay, then what happens over here? Billiards table costing 30,000 is there. That will be there on the asset side of the balance sheet. Payable 10,000 is there. That will be there on liability side of the balance sheet. Balancing figure will be your capital fund. Capital fund, this should be your question. Easy 10 mark question from NPO. Okay, next question which they have asked, inventory 5 mark question. 5 mark question from inventory, but look at this, exact same question is there in the SM practice questions. Exact same question is there in the study material. Okay, here it is 48 lakhs. What they have done over here, they made it for 4,80,000. Just they have removed one number, 0, that's it. Physical verification of stock in a business was done on 23rd June. The value of stock was 4,80,000. We want it end of the year. They have done it on 23rd June. The following transaction took place between 23rd June and 30th June. Okay, you can look at that question from study material, exact same. Now, out of the goods sent on consignment, goods of the cost of 24,000 were unsold. Okay, here it is 24 lakhs, 2,40,000, they made it 24,000. Okay, purchase of 40,000, so this will also be taken as stock only. Okay, goods are sent on consignment, but it belongs to us, it will be added, it will be taken as stock. Purchase of 40,000 were made, out of which goods worth rupees 16,000 were delivered later. So out of 40,000, what is delivered, what is not delivered, everything is my stock only. So it will be taken as stock. This will also be added. Well, stock, goods which are in transit, goods which are received, everything will be taken as stock. Sales were 1,36,000, which includes goods worth rupees 32,000 sent on approval basis. Goods are sent on approval basis. Half of these goods were returned before 30th June, but no information is available regarding the remaining. Whether it is received or not, what we are going to do, end of the year, if the goods are not accepted, not rejected, still it will be taken as closing stock. Okay, you are going to reverse the sale and you are going to take the cost portion of that as closing stock. And goods are sold at cost plus 25%. That means, remember this, on sales it is going to be 20%. However, goods costing 24,000 has been sold for 12,000. So there is abnormal sales as well as normal sales. You have to calculate the value of stock on 30th June. Exact same question is there. You can refer this question. Okay, exact same question. Easy, 5 marks again. Next, we'll go into the next one. They have told answer any one of the two. First one, PQR Associates brought a computer on 1/4/2020. 1/4/2020, they bought a computer for 2 lakhs and charged depreciation at 20% per annum under diminishing balance. That means WDV method they are following. They made further additions. 1/4/2021, they purchased one more. 1/4/2023, they purchased one more. So 3 assets they have purchased. On 1/4/2023, it was decided to change the method to straight line basis and charge depreciation, assuming the expected life of all the computers to be 8 years. So whichever computer is there, everything useful life is going to be taken as 8 years from 1/4/2023. Prepare computer account for the year ended 31st March 2024. So what you will do, the computer that is purchased on 1/4/2020, you are going to remove the depreciation for 2021, 21-22 and 22-23. 3 years depreciation you are going to remove, and that will be the opening balance. Okay. Whatever asset is purchased on 1/4/2021, you are going to remove 3 years depreciation is going to be removed. Okay. Then you will get the opening balance. 1/4/2021, what is there? 21, 22, 22, 23. So you will remove 2 years depreciation. 2 years depreciation you will remove, that time you will get the opening balance. 1/4/2023, you have purchased it this year only, you will pass the entry machinery or what is that? Computer account debited to bank account. This is purchased this year. So now what happens? One you will get the opening WDV, another one you will get opening WDV, third one you will get the purchase value. So all these three together, whatever you get, that will be divided by 8 years to get the depreciation for the year. So what you have to understand, the 2 lakh machinery which is purchased on 1/4/2020, you have to remove depreciation for 2021, 21-22 and 22-23 under WDV method. The 1,50,000 depreciation which is purchased on 1/4/2021, you have to remove the depreciation for 21-22 and 22-23, 2 years under WDV method. And the third one is just purchased. All three you accumulated, that is the value of your machinery on 1/4/2023. Then what you are going to do, divided by 8 years, because they said depreciation useful life is going to be taken as 8 years, and from here onwards you will follow straight line method of depreciation. Simple 5 mark question. Clear? Yes. Easy exam it was when you look at it. Yes. Following information relates to Mr. Prem, who maintains his books under single entry system. Incomplete records, they have asked one 5-mark question from incomplete records. He is not able to ascertain the amount of bad debts incurred by him and seeks your help. Bad debts, he is telling, we don't know what is the bad debt amount. Okay. Debtors as on 1/4/2023. So what you will do? Open a debtor account. Open a debtors account, and you have over here two balance brought down. What is the opening balance of debtors? 6,50,000. 6,50,000. Debtors as on 31st March 2024. That is closing balance. So you will write over here by balance carried down. By balance carried down 8,50,000. 8,50,000. Now you can see sales for the financial year 23-24. This year's sales only is 16 lakhs, out of which 80% is on credit. So 16 lakhs, if you take, okay, 16 lakhs into 80%, you will get 12,80,000. 12,80,000 is your sales. So now see what happens. 12,80,000 debtor account debited to sales. 12,80,000. Next, payment received during the year is 7,50,000, out of which check of 18,000 were dishonored. Okay, no problem. 7,50,000 you got, check is dishonored. So 7,50,000 minus 18,000. So 7,50,000 minus 18,000, 7,32,000 you got. So you'll write over here by bank 7,32,000. 18,000 is dishonored, no, subtract that. Bill of exchange accepted by the customer is 2,90,000. When bill is accepted by the customer, bills receivable account debited to debtor. So you will write by bills receivable 2,90,000. Now what you are going to do finally? Discount allowed is 1% of the credit sale. Whatever credit sale you are making, here you made a credit sale. 1% will be discount allowed. Discount allowed, you will write over here by discount allowed. So 12,800, because it is 12,80,000. You will take 1% of that, 12,800. That is your discount allowed. That is it. That's the end of the question. Now what did they ask? Bad debt. What is the entry for bad debt? Bad debt account debited to debtors. So you'll write over here by bad debts. And whatever you get, this will be the balancing figure. So take your calculator. 6,50,000 plus 12,80,000 minus 7,32,000 minus 2,90,000 minus 12,800 minus 8,50,000. 45,200 you will get, which is going to be your bad debt. 45,200. Yeah, that should be it with this question. Easy 5-mark question. Balancing figure you are asked to find, and bad debt is your balancing figure in this particular case. Okay, next, third question. Over here, 10-mark question they have asked. XYZ Limited, an unlisted company, issued 6,000 12% debentures of 100 each at a discount of 5% on 1/4/2021. What is the entry? What did they ask here? You are required to pass journal entries for all the 3 years. All the 3 years they are asking you to pass journal entry. First you will pass the issue entry over here. What will be the issue entry? Issue entry, you are going to get money, bank account debited. How much you are getting? 6,000 debentures, but it is issued at a discount. Discount of how much? 5%. So it is going to be 6,000 into 95. You will get 5,70,000. 5,70,000. And it's issued at a discount. So you can write discount on issue, or also you can write loss on issue debited 30,000. Discount on issue or loss on issue account debited to what? 12% debentures. To 12% debentures, 6 lakhs. 6 lakhs. Now, interest is payable annually on 31st March every year. Every year end, you're going to pay interest. Okay, for that, you'll pass the entry. Debentures are redeemable at a premium of 10% in 3 equal annual installments beginning from 31st of March 2022. So, first year end, okay, equally. So, redeemable at a premium of 10%. So, what is the value? The company invested in specified securities for the redemption of debentures. Entire loss on issue to be booked in the first year. What they said, whatever loss on issue is there, this 30,000, entire amount will go to P&L in the first year. First year only this will be debited to P&L. First year itself, loss on issue will be debited to P&L. You are required to pass journal entry. So what are the things that you need to worry about here? First, in year 1 itself, in year 1, you have to create DRR. You have to create DRR. How much will be the DRR? 6 lakhs into 10% is equal to 60,000 will be your DRR. 60,000 you'll create DRR. So you'll pass the entry P&L account debited 60,000 to DRR 60,000. Okay, DRR 60,000. That is one thing you're going to do. Then what did they tell? The company invested in specified securities for redemption of debentures. What is the specified security? DRR investment. So what you will do again, DRR investment debited 90,000 because it's at the rate of 15%. DRR investment debited 90,000 to bank. 90,000. This you are going to do. After this, what you are going to do? Every year you are going to pay interest. But debentures are redeemable at a premium. So understand this over here. This also we know, right? So what we will do when we are passing the issue entry itself, you will pass loss on issue. Loss on issue debited. Debentures are redeemable at a premium of 10%. So it is going to be 60,000. Loss on issue debited 60,000. And then you will write to premium on redemption of debentures 60,000. So basically this is an entry for debentures issued at discount, redeemable at premium. This issued at discount 5% discount, that is a loss. Redeemable at premium 10% premium, that is also a loss. Total loss we have 90,000. Entire amount will be debited to P&L in first year itself. First year end only you will debit it to P&L. Clear? That is one thing. Then what we are going to do, interest we have to calculate. Every year whatever journal entries they said that you have to pass entries. So now debentures are issued at a premium. So 6 lakh, redeemable at a premium. 6,60,000, 660 divided by 3. So basically every year you are going to pay 2,20,000. 6,60,000 divided by 3. Every year 2,20,000. So what you will do every year end, your entry will be like this. Debentures account debited 2 lakhs. Okay. Then premium on redemption debited 20,000 to debenture holders 2,20,000. Then debenture holders debited 2,20,000 to bank account 2,20,000. Debenture holders account debited to bank account 2,20,000 every year. For 3 years you will do every year. 3 times you will pass this entry. Okay. Then what we have to remember, every year interest payment entry is also there. Year 1, year 2, year 3. Interest payment entries are there. Interest, first year what will be the interest? On 6 lakhs. 6 lakhs into, what is the rate? 12%. 6 lakh into 12% will be your interest. So basically 72,000. Next year what will be the interest? 2 lakh you have already paid. So 4 lakh into 12%. This will be 48,000. Next year what you are going to do? 2 lakh. 2 lakh into 12%. This is going to be 24,000. This is your debenture interest. This you have to be careful. Remember when you are passing debenture interest entry, the TDS payable is also there. The TDS payable 10% will be TDS. So you have to cut that and then you have to pass the entry. So entry will be debenture interest account debited. Okay, to debenture holders only 90% and 10% will put it to TDS payable. Okay, this should be your situation. These are your entries. What about investment? Every year, 1/3 of the investment you will sell. Because 1/3, what is the investment you have made? You have made 90,000 investment. So out of this 90,000 investment, year 1, year 2, year 3. Year 1, year 2, year 3, you are going to sell 30,000. Again, you are going to sell 30,000 and again you are going to sell 30,000. Okay, every year 1/3 will be sold. Why? We are selling the investment, redeeming the debentures. Selling the investment, redeeming the debentures. Finally, after all this is done, remove the DRR and transfer it to general reserve. In year 3, remove DRR and transfer it to general reserve. This should be the entire solution. Okay, this you should know, and 10-mark question they have asked this. I hope it is clear. Let's go further. The last question in your material, 15-mark question, as always, they have asked from shares. Shares 15-mark question is there. P Limited issued 6 lakh equity shares of 10 each at a premium of 2 per share. Payable as 3 on application, 5 on allotment including premium. So here it is basically going to be 3 plus 2. 3 rupees is allotment money and 2 rupees is the premium money. And balance in 2 calls of equal amount. Balance in 2 calls of equal amount. So what we are going to do, application is how much? Application is 2 per share. Allotment is how much? Allotment is basically 3 rupees plus 2 rupees premium. Okay, balance they said, application is 3 rupees. 3 rupees. So what will happen? 2 calls. First call will be 2 rupees. Second call will be 2 rupees. Basically 10 rupees plus 2 rupees. This is your share structure. Application 3 rupees. Allotment will be 3 plus 2, 5 rupees. First call 2, second call 2. Okay. Now, applications were received for 8 lakh shares. We issued how many? 6 lakh shares. 8 lakh shares we have issued, and pro rata allotment was to be made to all the applicants. So what we have done over here, pro rata allotment. Okay, now understand this. 2 lakh applications extra. 2 lakh applications you have received extra into 3 rupees. 2 lakh into 3 rupees, you have 6 lakh rupees extra. Extra 6 lakh rupees you have. What will you do with the 6 lakh rupees? You will adjust it with allotment. What can you do? You can adjust it with allotment. For allotment, how much you require actually? 6 lakh into 5. 6 lakh shares into 5. You require 30 lakh. You have this extra. This will be adjusted with allotment. So what do we understand? During pro rata allotment, whatever extra we have received, we have the ability to adjust it with allotment. Now, if you notice, 2 lakh is excess applications. 8 lakh minus 6 lakh. 2 lakh extra applications into 3. 6 lakh rupees extra you got. But how many shares you are going to allot? Only 6 lakh shares. Into 5. You need 30 lakh rupees. 30 lakh rupees you need. Out of that 6 lakh you already have. 6 lakh you already have. That you are going to adjust. Clear? So basically 1 rupee per allotment you already have. That is going to be adjusted. Now, excess application money was adjusted towards allotment. This we know. Harish, to whom 1600 shares were allotted, failed to pay both the calls and his shares were subsequently forfeited. That means he has paid application, he has paid allotment. So when you are doing the forfeiture entry, premium you are not going to talk about only. Harish has paid both the calls. Harish has paid, failed to pay both the calls. So what will be the entry for forfeiture here? Understand this. Equity share capital account debited. Okay, 1600 shares into 10. Share forfeiture account. What has he paid? 3 rupees application, 3 rupees allotment. Premium also he has paid. Whenever premium is received and it is there in securities premium, we are not going to reverse that to share forfeiture account 1600 into 3 plus 3 share forfeiture account. 2 equity share first call 1600 into 2 equity share final call 1600 into 2. This fellow has failed to pay what? Both the calls, and we are going to forfeit it after the second call. You are required to pass journal entries. Anywhere in the question they have not told about reissue. Don't go ahead and pass reissue entries also. Nothing is told. Last thing is forfeit the shares and leave it. They didn't tell you that they are not going to reissue also. They didn't tell that they have reissued also. So this should be the situation. Is this clear? So this should be your entries. You have to be careful. Premium is already received. Harish has paid the premium. Premium is sitting in securities premium. Leave it. Let it be there itself. Okay, that should be your question. Last question. Differentiate between periodic inventory system and perpetual inventory system in study material. There is a table. Exactly they have differentiated. That should be your answer. Easy 5-mark question to close the question paper. So this is your question paper September 2024. They have asked easy paper. Time can be an issue. Okay, we tell in class, expect a lengthy paper and go to the exam. Okay, expect lengthy paper in accounts at foundation level. They are giving lengthy paper in the exam. So you should be able to attempt 100 marks if you are prepared properly. Okay, now whatever has happened guys. Now you can't worry about it and break your head about it. Okay, if you have done well, if you have not done well, if you feel that you have not done well, you could have done better, no issues. What you do, full focus you put on your next paper. Next 3 papers you focus on them. Okay, if you have done well, that those 3 also you do well, you will get very good marks. If you feel that you could have done better in accounts, now you have to compensate for that in the other papers. Focus on them. What is already done, you don't have to worry about it anymore. You just focus on the next 3 papers. I'm sure the next 3 papers are also going to be very, very easy. Okay, don't overstrain yourself. Have good food. Okay, good amount of sleep is required. Don't do all-nighters and all before the exam. Sleep, because when you sleep, whatever you have studied in all these months, everything you will be able to recollect. Okay, that should be it, guys. Wish you all the best for the remaining papers. Okay, see you in inter class. Okay, I'm sure all of you will come out with flying colors in your CA Foundation exam, and we should all meet in our CA intermediate classes. Thank you. Bye.